Hi guys, welcome to my YouTube channel. This is my first YouTube video on this channel. This is a channel created for me to kind of document my trading journey, take you guys along the journey with me, and also a place that I can hold myself accountable and sort of use as a little journal for my trades. So this is a series that I'm going to be starting. This is my weekly trading series. So at the end of every week, I'm just going to go through my trades that I took from Monday to Friday, if there were any, and sort of go through what my thought process was. And yeah, just kind of explain how I see the markets, and hopefully it's good for myself to have a look at things like this, and also hopefully potentially be able to teach some of you guys some useful information. So yeah, with that being said, this is a weekly trade recap for the week commencing the 10th of November. So this was a Monday. This week I made 6R on my prop firm account. So yeah, full transparency, there are some other trades in here that I didn't take due to reasons that I will go through later on in the video, but I think there is a total of 6 trades to go through, 6 possible trades that could have been taken this week, but nonetheless it was still a plus 6R week for me, which is obviously very positive. So yeah, with that being said, like I said, let's get into things. So this was the first trade of the week on a Monday on gold. Side note, these are all the assets that I trade. So I trade the futures market. So I've got NQ, ES, YM, so this is the US stock market, gold, silver, and then Euro futures as well. Now, looking at this first trade, so I trade a momentum-based system with an inverse fair value gap entry. So yes, I only look for entries in extremely trending markets, markets that have a lot of momentum, and that is my job as a trader. So markets, when they are moving in a certain direction, they tend to move big leg up, some sort of reaccumulation or distribution back into the EMAs or just into lower price. And my job as a trader is to essentially get involved in this area here to essentially take advantage of the next leg higher. That is where I found success for myself, and kind of the best way of looking at things for me as a trader. It kind of keeps things nice and simple. My job first and foremost is to identify the trending market. Once I've seen characteristics of a trending market and a very highly momentous market, there's a difference between a market that's just trending upwards and trending upwards with extreme momentum. The momentum markets are what I like to trade. So yeah, with that out of the way, if we look at gold on the higher time frames, obviously everyone has seen the run up on gold over the past year or so. Extremely bullish market. This is a market that I want to be looking at and trying to get involved in. If we go down to the 1 hour, we can see that we've had this big pullback down in price. Whatever this is, some sort of reaccumulation. I don't like to get involved here. There's just too much chop for me. Not where my edge lies in the market. But we have had this strong push out of this reaccumulation, which signals to me that money has come in and we may be ready to make a bigger leg higher, potentially in the long term go for these highs, but that's not what I'm worried about just for now. So yeah, coming into this session on the 15-minute, we can see that we obviously had this run up. We've got upward sloping EMAs, which is what I like to see. Prices come down and then it's kind of played around here, some sort of reaccumulation on a lower time frame. We've pushed above the EMAs. Now, I was not looking for entries here, but as soon as this candle got put in, see this candle's got hardly any wicks, big body, strong momentum is what I'm seeing there. Now I'm going to be looking for trades on the lower time frame. Also as well, just looking at this trade, bit of extra confirmation. We had a pullback here from this high, and this candle took out this low here, whilst almost reaching down into the EMAs before making this next candle here. So if I just replay at this point here, I was actually assuming that this high could be taken. That's kind of where my thought process was. So I scaled down to the 1 minute. Now coming into this point here, I'll just get rid of this low. You can see prices pull back, and then we've obviously reclaimed the EMAs, and if you can see, they're both all three of them are starting to slope upwards with a good sort of spacing between them. You can see here they're kind of intertangled. That's a sign to me that the market's kind of slowing down, but here we can clearly see that the market is speeding up, money's coming in, and we can look to take advantage of it. So if we press play, you can see here that this fair value gap was created, and then we get this massive displacement through this fair value gap, taking out some internal highs as well. And to me, this basically signals that we could be going for this high, but most certainly we'll be taking out this high here. And this high here is actually my break-even point. So once we take this high, I'm going to go risk-free on the trade. If it wants to take out this high and go higher, great, we can potentially capitalize on it. If not, worst case scenario, break-even. And if we play out the trade, beautiful break-even. So I think if we actually play this out further as well, actually, yeah, it would actually end up being a loss. So it's just an example of my break-even rule coming in nice and strong and protecting my capital. So that was the first trade of the week, 10th of November, Monday. So the second potential trade of the week was Tuesday the 11th. Now, full transparency, I did not take this trade because it was US bank holiday, but I did, however, want to showcase it just because it's an excellent example of how my system works. So, yep, this is on US 30 YM. So, again, you can see, obviously US stock market generally bullish. You can see that here. Now, if we look closely here, we did have this push down from these highs. We did break these internal highs here, but I kind of view this as the main push lower. Anything like this is just sort of chop in between. But we came into this session, we had this big push up here on this yesterday's session as well, and we actually broke this high upon this candle. Well, I think it was this candle here. Yeah, this candle here, but I did want to see some more conviction because equally we could have just snapped down, taken these lows here, and that would have been probably the trend continuing lower to ultimately take this low and then probably this low here. However, that didn't happen and we did get strength upwards. So if we play one more candle, boom, this is exactly what I want to be looking for. Strong candles upwards, pushing away from the EMAs. This is a perfect environment, perfect characteristics to look for momentum plays on the lower time frame. Now, coming down to the 15-minute, again, we can see a similar thing here. Pushes away from the EMAs, coming back down, strong pushes, back away. Look at how big these candles are, this is perfect. And again, nice little bonus, but this low here on the 15-minute was actually taken out by this 15-minute candle. So whatever happened in here, some form of reaccumulation, lower time frame, and then a big push away. So this was perfect to go down lower to the 1 minute. So looking at the 1 minute, again, the reason I didn't, if some of you may have spotted, but this here was an inverse fair value gap. Now, the reason I didn't enter, I would have had to enter on this candle here, is because I always place stops under the lows, by the way, if anyone's wondering. But the reason I didn't enter this is because there would have been no clear break-even point. This high has already been taken by this candle, and therefore, if I did take this, where is the break-even point? There is no clear break-even point. I would probably have to break even as soon as this high gets taken, but then you can see it comes down lower. I just generally don't like these trades. Sometimes they work, but in my testing, I prefer not to take them. So being patient and waiting for another setup, you can see price pushes up, pushes back down into the EMAs. EMAs are sloping upwards very heavily, and there is a lot of spacing between them, just showing me that there is clear momentum in the market. So here you can see fair value gap has been inverse with very, very strong displacement here. So this is my entry candle, so my trigger. Again, as soon as these highs are taken, then that is my break-even point, because equally, we could push up from here, take these highs, mess around up here, and then come lower like this. That is a very possible thing to do. For this could be a further reaccumulation, for then again, price could easily sort of just do this and keep going higher. That could equally happen as well. And in that case, I'll be looking to get involved probably here. Now, moving on from that, if we play the trade out, boom, massive displacement above the high, easy break-even point. If we just play this trade out, it's a very nice trade. Boom, 1 to 3. Now again, full transparency, didn't actually take this because it was a US bank holiday, but it was a lovely example of how my trading system actually works. So yep, that was the second trade, 11th of November. Okay, so moving on to the third trade of the week, which was a trade that I did actually take live. This is on gold, 12th of November. So again, just looking at the 1 hour time frame, you can see we've had this big push up. Again, this is what I was talking about, this sort of reaccumulation here. So price made this push up, sort of messing around in here, doing whatever it needs to do, and then I'm hoping for a leg like this, which I can start to get involved in. So if we get rid of that, you can see New York opens up, we sort of mess around for a bit, but then we get this big candle through these highs here. Clear displacement, EMA sun slope upwards. I'm thinking, great, this is a nice trade to begin to look lower. So yeah, if I go to the 1 minute, sort of had this big push up, get a nice little push down into the EMAs. Again, you know, not too much messing around. It's kind of down in here, whatever these, this is again, reaccumulation. If we get a displacement through this fair value gap, I'm thinking, good, we can enter. So we do get a nice displacement through this gap here. Nice entry candle there. And if we play this out, we get a push through this high. Again, this is my break-even point, this high here. So as soon as this happens, I'm risk-free. And if we play this trade out, we again get a 1 to 3. So there we go. If you missed this setup here, there again was another nice setup right here. And you can see fair value gap just there being pushed through. Entry would be on this candle. This would be a break-even trade. Again, this would look something like that. You could even move your stop up here to be as tight stop under this low, but nonetheless it would still be a break-even because this high would be your break-even point. Again, we'll come down here. So yep, that was the trade on gold. That netted me a nice 3R on the week. The fourth possible trade that could have been taken was the silver trade. Now, full transparency, again, I didn't take this trade only because this was the exact same setup that we went through on gold. I just like the gold chart a little bit more. I won't go through this one too much just because it's the exact same setup, but you know, silver, again, very trending market. If we look at the hourly, you know, sloping upwards, EMAs, we've just had these nice bullish conditions, and then we get this massive displacement upwards, very nice. Go down to the 15 minute. Again, New York opens, we get this really nice push down, taking out these lows into the EMAs, and then we push higher. Great market conditions to look for a trade. We push down here, this fair value gets closed upon this candle. Exact same rules, break even point here, and then just letting it play for a 1, 2, 3. So yeah, like I said, didn't take this trade because it would have been double risk if I did so, because gold and silver are obviously heavily correlated, so I didn't want to expose myself to more risk than I needed, but nonetheless still a very nice setup. Okay, so moving on to the fifth trade of the week, which was the 13th. I think this was a Thursday. Yep, Thursday. This was on NQ. So if we look at the higher time frames, generally on NQ, obviously, you know, long term we're bullish. That's very easy to see. You go to the daily time frame. You know, clearly bullish. It's the US stock market. It's probably going to go up. However, in this scenario right here, you can see from the highs we kind of had this push down to here, and this high here was, we failed to take this high. You know, we kind of messed around here. This obviously is some form of, you know, distribution, this kind of price action here. Don't like to get involved here, but as you can see, we broke through the distribution, and most likely we are probably heading lower. That's what I thought coming into the session. Extra little confluence as well. The new week opening gap was here. We gapped higher, and most likely, not that it was an exact target, but considering we had this momentum push downwards, you know, likelihood is we could potentially fill this gap. So yeah, coming into the session, we had this strong 15-minute candle downwards. You can also see as well, which is very nice, we actually took these highs out here. and then push further down. So this was very nice. We did have a retracement higher, and at this point here, one of two things can happen. So we either break these highs here and keep moving forward, or we can respect the downtrending EMAs, come in with some momentum and take this low here. And obviously, as you can see, that's kind of what happened. So next candle, we get a big push down. This again, we took out these highs here. We're also respecting this order block right here, and so yeah, we probably are going to see these lows get taken out. So moving down lower, we get these big push down. Also, we paused extremely close to these lows here, given the momentum downwards here, and then another big push here. Likelihood is we're probably going to go for these lows. Now, you can see here, we actually inversed a fair value gap pretty nicely, good momentum. So this was my entry candle here, stop above the highs. As soon as this low gets taken, we are going break even. So if we play the trade out, right now I am break even on the trade. If it comes down and stops us out and then goes, it's break even. If it goes, it goes. And as you can see, we have a very nice candle here, which takes us lower. We carry on playing this trade. Boom, we hit the 1 to 3. So again, very nice trade, very nice trading conditions, easy, simple setup, just following a rule-based system. So yeah, and now moving on to the final trade. So the final trade was on ES. This was actually the same day as the NQ trade. The NQ trade was actually around here on this chart. Obviously, this load already been taken here, no fair value gaps, but looking to ride the momentum lower. If we look again on the 15-minute, nice strong candles downwards. This is what it would have looked like before my trade played out. So again, nice momentum downwards. This is a very clean, sort of nice market environment to look at. Again, we can see here, ES has actually broken this high here. That was a high in NQ that I said didn't want to get broken. But given the way it broke it, there was just small candles going up. Again, just small non-momentum candles, but then we see these candles here. There's a big momentum. Clearly, there is chance of more downside action. So I wanted to take advantage of that. Anyway, go down to the lower time frame. As you can see, we made this push down. We've pushed back into the downsloping EMAs, formed a fair value gap. We get a nice close beneath this fair value gap. Pretty big displacement downwards from these highs up here. Again, this is my break-even point for this trade, and if we play it out, hit break-even right here. So I think this trade actually ended up going lower. It just played around for a while, and oftentimes, this chop here can actually take out these highs. This is obviously distribution of some kind, and oftentimes, if something is distributing like this, highs will get taken before a move lower, and obviously these highs here kind of got taken by this move here before we head lower. Equally though, there's no reason why when it's chopping sideways and distributing, this high here couldn't get taken for this move lower. So yeah, that is why setting a break-even point here can be very useful. Keep you out of unwanted chop and unwanted losses. So yep, that is my trades for the week. Like I said, I'm going to be doing a weekly series on my trading weeks, holding myself accountable and hopefully providing some good small bits of education for you guys. Very positive week, stuck to my rules very nicely, no losses, only wins and break even. So pretty much the best week or best kind of week you can have when you're a trader. Yeah, no drawdown on the account, just wins and break even. So yep, hope you guys enjoyed, and yeah, stay tuned for the next weekly analysis for next week. Good luck on the markets this week, guys. Stick to your rules, keep mentality, keep psychology good, and yeah, good luck to everyone.